All right, all right, all right. Not much more to say today. We got fed at 2 o'clock. More importantly, is his statements during the conference at 2:30. So that's what we're gonna have to watch for. Really, today should just be a sit on your hands kind of day. I'm expecting it to be a choppy day. We're looking at the futures right now, and here's the futures on the daily, and it's pushing up. It looks like it's giving this a little challenge, challenging the high of 195.75. I don't expect much more out of it pre-market, but we don't trade on my expectations. So the high we're making is 191, and we'll just see what it does. We had this nice hammer off a major support. It blew through. We were looking for that 4200 mark on the S&P, and we saw that yesterday. And now this is the indication for the day. So when the Fed speaks, I mean, the last time he mentioned something that was probable, the market went down. But I think that there was an anticipation that because he was um, vocal about the 50, um, the whole market started talking about 75 as possible, and that's what blew the market out. He also started talking about being aggressive with his taper. So I believe that that also had a lot to do with forcing the market down, and we'll see what his verbiage is. This whole thing could very well knock the market right back down. It's not common that you get a V bottom, right? So it wouldn't be surprising if we tested the low again and then maybe started our march up, or it could very well test the low and go for that 3,800 and take out those gaps from pre-pandemic time. So I mean, anything's possible, right? What did I just tell you? I just told you that hey, the Fed will come out and the market may go up, but it may go down. And you know what? That's basically what every analyst tells you. Hey, it may go up, but it could come down. Um, if you listen to CNBC, that's it. It could be the bottom by a little bit, just in case it goes up. And that's really what they're doing. Everybody thinks there's a crystal ball. That's not the case, man. We look for a few indicators, some probabilities. We saw this hammer break on the resistance. It gave us the probability that it pops. It's going to go up. We know where the resistance is. We say, hey, this could be our target. Boom, we hit the target. And everybody looks like a superstar when they do that. But that's what the game is, man. It's risk management. You see a probability, you take it. You know what your risk is on the trade. You're willing to accept that risk. If it works out, you make money. If it doesn't, you lose money. When you have a good idea of probability and setups, then you just win more than you lose. It's not that you always win and you never lose. You just win more than you lose. And net over the long run, you should be making money. And that's it. That's the way it trades. That's the way you trade, and then you break your rules and you lose a lot of money, and that's the way you learn. If we look at the S&P on the daily, here's the resistance on the SPX. The difference is the futures trade almost 24 hours, and SPX is just market hours. So that's the tag. We know we're going to open up high right now if the futures remain where they are, and we just got to see what happens, man. If it was just a trading pattern, I would ride this son of a gun up and look for about 4,300 on this pattern. My first test would be a break of this high, so my first target would be this high, and then I'd look for the fib retracement. And you can't do that because you're going to have a fundamental change, right? You're going to have a news announcement. I call it a fundamental change. It's really a news event, but a news event based on the fundamentals that move the market. So based on that, you got to kind of back off and just let this play out and see what's what, and that's it. If we take a quick look at BTC, BTC, there it is, man. We said it was going to hit this. We were looking for this target. I had my order in there. I'm sure I got executed. I'll take a look at that. Didn't look at it last night. And away we go. We're up. So that's cool. We're bouncing off of this line. Now it doesn't really mean anything. We're bouncing off of that trend. We're going to crawl back. I'm even going to get rid of that trend. Now, that trend line's probably going to pose a minor resistance, but we're not even going to clock it. Let's expand this and take a look at what we're looking at. This is our trading range now, right? We're inside this monster pennant. And we were over here inside the pennant, and we were screaming and yelling, "Yo, this is setting up a really nice trading pattern, the whole 9 yards." It's become orderly trading, and this is where I started to get on the BTC bandwagon. Not like a fanatic that thinks that this is the new currency, but the bandwagon like the trading. So we got involved here. We got involved at about 41. We took it up here. We took a little bit of profits because of the gap, and then we started getting involved again down here. So I bought some at around 48, 48.8, 38.8. I'm sorry, and now I just got it off, and I was a little bit over this my target, my execution. So I probably got 37 350. And now we're moving on up. Let's see what's happening. We've got a green finger on the momentum. The histogram rolled over. Let's see if we could start pulling this up, make a higher high, get out of this trend right here. But this is a risk asset, and if the S&P is getting hammered and the Nasdaq's getting hammered, then BTC is going to get hammered. So you could trade anywhere, probably play the same patterns. It's just what has the greatest momentum and the biggest movement. Who's going to pay me back sooner? So that's what I'm looking at. I mean, if BTC starts moving on the same consistent patterns that SPX moves on, but I'm getting a better payoff. I'm getting bigger movements, then you bet your Aunt Fanny I'll be trading this more than SPX. Because I want to be in the trade. I want to be out of a trade. I want to sit there and watch things linger. On the 120s, it's setting up a nice bear flag. If you wanted an entry for today, either the break of this high, or if we in an hour, you could take the break of this high right there, and that's the dilly on the BTC, man. Looking at treasuries, I mean, they're peaking out. Yeah, nope. Let's get rid of this pennant right here because we already broke it. But I think it's just excessive. We got a little gap. We may end up filling this gap today. If there's a knee-jerk reaction to the Fed, we'll probably pop up and close that gap. But watch the momentum. If the momentum can't break to the upside and stays low, then there's no commitment on that, and it'll probably turn around. And that's what we're looking for. I mean, but bonds have been abused, so there's got to be a bounce. There's a bounce somewhere in here, man, and I think we bounce through May. I mean, we may get a nasty knee-jerk reaction to the Fed, but I think we're going to see a bounce through May, and then we're going to have to reevaluate it. We need something to break. We need China to back off. We need maybe somebody whacks Putin. There are signs of inflation easing. You're seeing it in the automobile industry. You're seeing some signs of easing in price action. So it's going to be a very interesting time after this meeting because everybody's going to be watching the data, just looking for the peak. Where's the peak? Where's the peak? Where's the peak? And I still feel that the Feds are not going to have to be so aggressive going into the year. And we're at midterm elections right now. So I mean, you get beat down. So this way we wipe the house clean of all these fucking Democrats and get Republicans in here. But then these idiots are suppressing our rights and women's rights to choose. I mean, your argument should be between you and God, whether you're doing the right thing with abortion or not. It shouldn't be state issued. I hate all these fucking. I mean, the Republicans are just like the Democrats when it comes to the bleeding hearts of thy neighbor's keeper. I don't need a keeper, man. I'll take responsibility for my own life and let everybody take responsibility for their lives. I don't need somebody to govern it for me or judge me. I'm going to be judged. If there's a God and I meet him, I'll stand before him. I'll explain myself. If it doesn't work, then fuck it. Yeah, I guess I'm spending a hot eternity. Um, if you believe that shit, I don't really believe that there's um, judgment and cause and effect and punishment and shit like that. You know, that's just the fucking Christians' way and the Catholics' way of controlling society. Yep, there go the rest of my fucking viewers. Okay. Yep, I'm anti-religion, man. Anti-religion. I'm John Lennon. Imagine there's no religion. Um, all right. So anyway, that's it. In the shorts, in the shorts. Really, I mean, we can go through the rest of the securities we like to look at. We're getting some movement out of Tesla and shit like that. But until the Fed does its thing, today's a dead day, man. It's a dead day. There may be a lot of action, but I can't rely on anything. You know what I'm saying? Because it's not based on technicals. It's based on emotion, and it's light volume market. So the players, the hedge funds, the algorithms, they're going to be able to push the market around. And that's what's been going on. That's why we've had these 155 days on SPX and shit like that. I mean, you don't see that, man. The S&P 500 moves 40%, 40 points. Yeah, maybe a bad day is 60 points. Yo, not 2% in a day. 3% in a day. That's very extreme. And again, that only happens when you have light volume out there, and the big boys get to bully the market, and that's what they did. I mean, it's obvious with that run on stops. The big boys bullied the market, took out all those stops. And let's talk about those run on stops again. Okay, so you understand it. If anybody hung in this long. So this is a major support right here, right? So everybody who's long or went long on these lows, they put a stop loss here to protect their downside. They said, okay, if I break this major support, this fucking thing's gonna tank. So I'm getting out. I'll take this little bit of loss. In addition, the bears, the shorters say, yo, if we break this fucking major support, this baby's gonna tank. I'm going to put a stop order right here and get in on a short and ride this down to 32. Okay. So, yeah, a lot of guys do that. And mostly retail traders and shit like that, they use their stop loss. So, what happens is you got a collection. You could look into the depth of a market, right? And you could look at like the market makers books. That's what level 2 is and everything like that. And you could see all the stops that are down below this resistance, right? So you have all the protective stops for the bulls who are trying to ride this bitch up, and you have all the entry stops for the bears who are trying to ride this up. Right here, that's a target of cheap stock, right? So you get algorithms and you get institutional traders, and they see that the algorithms could read it. They weigh it against the volume. They know that if they start selling, they could push the market down and take out all this cheap stock. But they also see the depth, right? So let's crank this up. So they see the depth and they see nothing below it, no stops below it. So there's no additional selling going on. Once they eat this up, there's nobody out there selling stock. So boom, the market goes up, and then they start fading in to their to their shorts. Because they started selling up here, they start fading in, boom, and it starts the action the other way. The market starts floating up. People see this fucking hammer, they get involved over here, they push this thing up more, and these guys are making money on the way up. So that's it, man. That's what happened. That's why we look for this pattern. Very, very good pattern, and that's why it happened, because of the light volume and people seeing the target down here of all these stops down here. So that's it in a nutshell, man. That I like that stuff. That's exciting stuff. I used to love to do things like that. It takes a lot of money. You got to manage a lot of money to do that. But now, these hedge funds and these algorithms, they have the money. And then if you're doing computer trading, I mean, you don't have to be that heavy in the dollar amount. I mean, you can be so precise on your timing and movement and gauging everything that's going on around the market. Looking at this at like megabytes per second, and you could be very efficient with your buying power and be able to do it very efficiently. So that's what happens. And again, when people back off the market and there's no volume, that's what these guys have the ability to do that. So anyhow, that's the short of the long. That's the fun stuff about the industry. Subscribe, hit the bell, hit the like. I appreciate all that. Comments and everything, interaction, all good. Good comments, bad comments. If you want me to look at something, let me know. I know a few guys want me to get online and start streaming again, which I was considering it, but now I just had a snafu with my internet. I'm actually using uh, a wireless, cellular internet today. So I'm definitely not streaming now until I get that problem resolved. So I got to figure that out. I think I might just go with Starlink, but that's going to take me about 6 months to get it up and running. So anyway, trials and tribulations. All right, everybody. Have a good day. Might be the wisest move to sit on your hands today. Remember, calm, cool, and have peace when you trade. And good luck with your trading.